Okay, so Elliot Wave. Now, I guess when we talk about different kinds of oscillators and things we can overlay on our charts, Elliot Wave is one that is quite a common one. I don't know how much people currently use it, but it's something I have used in the past. I wouldn't say it's something I use all the time, but it's certainly something when we see certain patterns emerge in the markets and certain types of market trading, that it's good to have an idea and have an understanding of what the market's thinking. Because again, everything like Elliot's Wave, Fibonacci, they're all based around mathematics, all based around patterns and formations, and these things will apply to the markets, not all the time, but when we do identify, when they do involve themselves with the markets, they can work very, very well. But again, it's like all things with technical trading. It's all about finding the right time frame, the right instrument, and making sure we're using the right kind of technical techniques that match and mirror what the market's currently doing. So a bit about Elliot's Wave. Well, it's a theory that was developed by Ralph Nelson Elliot. The wave theories concentrate on the price and argue that the key to market analysis is the price action. Okay, so the Elliot Wave is calculated and fundamentally based on the cyclical nature of market activity. Therefore, markets will go up, markets will go down. We all know that markets move in cycles. Okay, so again, they argue that the financial markets always work in these cycles, and that it is characterized by trends that move up and trends that move down. Okay, trends that might be long-term in nature, but they will always, at some point, move from one direction to reverse. So again, the Wall Street crash in 1930 is a prime example. So again, it's all about basically interpreting. Like I keep saying, you have to apply these theories and these technical studies to the right market conditions. They won't always work. So again, look at your trend channels, look at your Bollinger Bands, look at your, your mean reversals, your parabolics. Look at any technique that, again, you're going to use, but make sure they're working in tune with the market. You can't force Elliot Wave to fit into patterns and market conditions that is not designed to do. So wave theory divides price action into 5 main phases. And this is represented visually in the candlesticks and the line charts that we all use. So number 1 is a new trend begins to form. And number 2 is the correct phase in the new trend occurs, but the market never trades below an underlying trend, the inception point. Then number 3, the most powerful move in the cycle, okay, the powerful move in favor of the trend and characterized by a large net new position. Then number 4, a corrective phase, which again goes back to our wave theory, so a similar pattern to that in phase 2. Then number 5, a continuation cycle, and again, the bubbling effect hits a critical mass before bursting, and the trend completely reverses and looks to retrace. So how we identify Elliott Wave patterns. So it's up to the trader to design a system they find effective for identifying the formulation of Elliott Wave. However, the theory has a basic principle, which we explained later in the webinar, but again, it's all around trend lines, or a good example of how we use our technical analysis, and we can adapt our trend lines, our charts, and again, overlay the wave patterns to understand how the market is moving. So the first theory, wave 1. So the green line indicates the first wave, okay? So the wave has begun, and in this case, we're in a bull market. So the old trend is not completely broken, and it is still considered to be partly in force. So open interest is still consistent, indicating the continuating trend that the market should move upwards. So most technical indicators still show nothing in the way of potential trend reversal or a clear trend formation. Okay, so again, that's for us to decide what the market is feeling and how it's moving. So therefore, it's very hard to trade off this initially unless other indicators are telling us that we're having a change of trend. So Elliott Wave theory 2, okay, the second wave. So the second wave is a corrective wave. So think of it as a consolidation period. So some signs of support in the new trend, in this case a bullish trend, appears briefly. And it could be down to economic data, it could be down to earnings, or some sort of new fundamental information that helps this move to form. But again, when we talk about the waves, we know that at some point the markets will move in one direction and correct. Now markets have to correct because people are taking profits and people will still have the opposing view. So again, it's when we talk about any kind of large scale move, okay, so we talk about any single big candle print, Yeah, generally, when we're talking about any kind of move, the 80% of the time, yeah, a very big move will retrace to at least 50% of that initial move. So again, what we're looking for in the Elliot's wave is how these moves form, okay, so how the trend continues, how we then catch on to that reversal, that profit taking, that bit where we have to let the market retrace and come back to us, then the overall trend, yeah, and the next wave continue. So it's all about understanding it, especially when we trade the Elliott wave, where we are in the cycle. So again, if we're going to trade the Elliott wave, we have to understand that there's 5 waves or 5 phases that we can get involved in. So okay, so we have to understand that phase 1 is the initial trend either continuing or taking effect. So again, our points 2 and 4 are seen as entry points. Our 1, 3, and 5 could be exit points or continuation points. So again, this is why the Elliott wave is not so clear cut. You have to understand what the theory means in its entirety, then understand how you're interacting with the wave in between these 5 points. Okay? So again, the volume should be lower during the wave 2 more than the wave 1, indicating less people are selling into the move down. So we have to note the wave 2 prices usually do not retrace more than 2/3 of the gain seen in wave 1. So again, going back to our 80% of the time, markets will retrace 50% of the time. But again, when we're looking for these wave formations to happen, if they're going to be valid, we shouldn't be seeing large retracements of the actual wave. We should just be seeing some perhaps profit taking and locking in some profit of the overall move, and then allowing the momentum to take the wave forward. Okay, so if we see large retracements, then it's probably not going to be that we're in an Elliott wave pattern. Okay, so that's how we understand. So wave 3. So in most cases, the third wave is usually the largest and the most powerful wave in the trend, shown in point A. So again, we've shown the initial trend in point 1, then we've seen in point 2 a bit of a retracement and profit taking, then wave 3, yeah, which is indicated by the green line. That's going to be the meat of the trade, okay? So hopefully we're either still long from our entry point in the beginning of the wave, where we've taken that opportunity to take hold of that bullish bias, then maybe anywhere down point 2, we find some levels of support, or where the market could turn and begin to move up. So again, if we're buying anywhere above point B, where it's indicated, we know we're going with the overall trend. And again, if we identify the Elliott's wave, then we know until we see some kind of profit taking, some kind of reversal, that the trend's still valid and we need to keep our long bias. Okay, so the price usually moves in favor of the trend. And again, if you're going with momentum, you're going with the bias, this can happen quite quickly. Again, think about the move we saw yesterday in the S&P. We made some, fairly quick highs, but again, they ground up over really a 3-hour period. But then it took less than an hour to sell off, again, nearly 100% of that move. So again, you have to understand that if you're going with the trend, the sentiment of the market, and who's actually trading, as to how quickly these moves are going to form. So again, if you're right, then generally these moves happen quite quickly, because you're going again with the momentum, you're going with the rest of the market. So it's going in your favor. And again, that's when you know you're wrong in trades. It tends to not grind against you slowly. It tends to move very, very quickly and hit your stop or hit your pain threshold very quickly. So wave 4. Okay, so the second of the 2 corrective moves, again, is towards the end, or towards, again, after we've seen 2 distinct moves to the overall bias of the move. So again, the price remains level for an extended period. Then wave 2. Then the market consolidates after a large move that we've seen in the wave 3. So again, that's everybody jumping on the trend. The trend is already confirmed. Everyone's going with momentum. So again, when we see the point 4 reach, the end of where we've sold off and we start to take some profit, then obviously the momentum and the volume is going to be less. So again, the corrective move is often characterized by a retracement of, again, generally around 30% of the move that we see in wave 3. So again, that's what point A indicates. So in other words, the low or high volume any correction in wave 4 should be really no more than 1/3 the max of the move that we've seen in wave 3. So again, it's all about understanding the overall 5 waves. And again, if we're seeing big corrections on point 3 and then the market's moving down, then again, what we're going to see is we're going to see this trend is not being held and the wave formation is not working. Okay, I'm just getting somebody else saying they've got a sound problem. Is anybody else having a sound problem? Okay, Harley's saying no problems. Okay, guys, I'm just checking my settings just then. But no, again, we've done a sound test and everything should be fine. I think if anybody's actually come into the presentation a little bit late, you might have to reset because it might be a different audio feed.